Hello my fellow freedom builders and welcome back to the channel. Many of you have asked me when I would come up with a new small cap stock that had the potential to increase a lot in price, and today I'll have a look at Shutterstock, which I think has a lot of potential. Now first of all, I just always forget to say it, but remember that on Facebook I am actually at Building Freedom, where I put all my stuff with all the videos and all the news. I'm not using it too much now, but I am planning to use it a lot more with financial news. So remember to sign up on the Building Freedom Facebook side. I also come out with a newsletter soon that you can sign up for free and have some free online courses, etc. But I'll give you that later on. Alright, let's get to it. Shutterstock. And today I'll start by showing you the graph, because this is actually the reason why it first came to my attention. Now normally I have a lot of different screens and scans, and I'm screening for fundamentals and technicals, and this one came up on my short-term, bit speculative stock scan here from a technical analysis perspective. Now I have started testing this setup, and it's actually only 3 weeks ago I started making a little test portfolio on this. It is up 23% right now with a bit of margin, not much, but with a bit of margin it's up 23-24% now over the last 3 weeks. So this is a result of one of the stocks, and I'm actually already long this stock. As you can see, it is in the so-called green zone. If you have seen my videos, you know what that is. It is doing better than the overall market, and it is above the RSI here on a weekly chart. Now looking at a daily chart, what I'm looking at here is that the RSI keeps staying above the 50 line here. We are bouncing on a support line here. Then we go up through the 20 SMA and we bounce on that one, and I bought here at 52.30, I think it was here this day, the 28th of September. So as of now it is already up something like 10%, but I think it has a lot further to go. Now yesterday I would have made the video there, but I ran out of time, so I could have given you that to enter here, but I think there's still a lot of room on the technical side here. Now sometimes, and that's just to give you a perspective of how I use the technical analysis, as you can see there's a very well defined trend line here. What I often do is that I take this one, and if you're using TradingView, just press Ctrl C and Ctrl V, just like you copy paste in a normal document. And normally I make this parallel line here to have some sort of idea where this can go if it stays within the channel. And if this one stays within the channel, we can see here that it should be able to move up towards the area up here, somewhere between 66 and 72 somewhere. So there is some more room for upside here, but it might also go a lot higher. Remember, I'm not a financial advisor, so this is just my speculations as to where this might go. Now remember, I never put targets on my investments. It's not like if it goes to 70 I simply sell it. As long as I think the trend is valid and strong, I keep at it. And that may mean that it goes down to 60 again and I have to exit, or it might mean that it goes to 300. So I follow the trend. I never try to guess where the stock will go. All right, let's have a look at the stock. First of all, when we're looking here at Seeking Alpha, very good site, also looking at the company profile here, you can see that Shutterstock is a technology company, provides content and tools and services in North America, Europe and internationally. Now, if you are in your daily work, if you're working with advertising, maybe some movie stuff, YouTube, anything, website, anything where you need some graphical help, then Shutterstock might be the one place you go. It is simply a place where the content providers all over the world, there's a million of them, they can upload their pictures, their movies, their sound clips and so on, and then the customers are logging into Shutterstock to buy these pictures. If I am making an advertising for something or a website and I need a picture of a forest in the springtime or something like that, I can go into Shutterstock and find it and buy the pictures. That is pretty much what they do. When we look at, this is just the revenue, but we'll look at that in Stockopedia just in a second. When we look at it here, you can see now this isn't Danish, but you can subscribe at something like $50 per month and upwards. And there are a lot of different packages here for video, for pictures, for sound clips. And I know of several graphical designers that use stuff like Shutterstock or Adobe or what are they called, Get Image or something like that. There are several of these services out there. Shutterstock is one of the larger ones. When we're looking at the website, and of course, as always, I will put the links here below, you can see that they right now have something like 340 million images in there and 19 million video clips and thousands of music tracks and so on. And that is simply the content provider. So if you want a red desert with a tree in the middle and a blue sky, you can download that. Now, this is an expanding market. You can see the stock imagery, the music and the video. It is growing on a year-to-year basis, and there is some quite large numbers here. If you go into this link yourself, you can see some persons describing it in here. There are small videos, which is actually quite nice. You can see some of the areas they are selling to: digital advertising, websites, video on demand, mobile use, and so on. That is the areas where Shutterstock are. They have an advantage when these areas are growing. All right. So when we are looking at the numbers, Shutterstock here, we can see that in Stockopedia, they have a very high quality rating and a very high momentum rating and a very high stock rating. Now, the value is so and so, and that is of course because the price has gone up very much already. You can see from the bottom here just in June, it has actually gone up something like 75%, and back in where we had the virus here, we are up around 100% from there. So I should not be able to say if they can go up another 100%, but a lot can happen with these small cap. You can see they have a market cap of only 1.7 billion euros, so just shy of $2 billion. So it is a small company. Looking at the numbers here, we can see that the PEG ratio is quite nice. I do like that to be below 2. 1.3 is great, and that is of course the PE ratio divided by the estimated growth in earnings per share. So we can see we're not paying too much for the future growth. Now again, the value is not fantastic, but it's not completely rubbish as well. Price to sales 3, that is better than the overall industry. EV to EBITDA 20, not in the best end, but kind of average here. When we're looking at the quality of the earnings, you can see return on capital 9, return on equity 10, and operating margin just below 6%. So that is okay, and we can see compared to the industry, it's actually quite well. They do have a Petrosky score of 7, that is great. They are in the safe zone on the Altman C score. And looking here, we can see that after a number of years where the earnings per share, the normalized earnings per share have been a bit sideways, then we can see that they are estimating some very large earnings spikes here in 2020 and again in 2021. And actually the one here for 2020, that has already started to happen. That's one of the reasons why the stock has gone up so much, because that they have surprised positively on their earnings. I'll show you that in a second. When we're looking at the free cash flow, that is quite stable, which is great. Of course, it would be nice with a lot of growth here, but they do have cash flow, and they actually, as far as I can tell, they have started paying out dividend, but I'm not completely sure of that. This is trailing 12 month. But it doesn't seem like there's anything in the estimates here. So I'm not 100% certain where this number comes from. They're quite liquid. They have $158 million to work with here in the cash, in free cash that they can use. And that has gone up. That is great. And they have negative net debt, which of course give them an interest coverage of 100. They have no problem by paying the bills here, the interest. When we see here, we can see that the revenue is estimated to grow. We can also see that the net income is estimated to explode kind of here. And we can also see that the earnings per share will go up a lot. This is the surprises here. That is really where the analysts got a big surprise. You can see there's only 3 here covering it, but it has gone from 3 months ago at a sell going towards strong sell, and then now 3 months later we are at a strong buy. So people got really surprised here, and we can also see this jump in expected earnings. So that is very, very nice. Now, again, here is a 120-page PDF, and I've been through a lot of it, and I'll link to it, but I don't really think that it is necessary to read the entire PDF to understand the business. What they do here is that they are just showing what their base is, what their product is. They have around 1 million contributors uploading and making a cut of the earnings. I have not registered as a contributor myself, as a content provider, so I'm not 100% certain how large a percentage they are getting. But if you are searching on YouTube for Shutterstock, you're not finding the Shutterstock shares analyzed, not at all. You're simply finding videos as to how to make money by making content to Shutterstock. I know that a lot of photographers and so on, they are making a good passive income by providing pictures and movies and so on to Shutterstock. So that is what they do. Then they have just around 2 million customers buying all of the stocks here. So you could say that the nice thing with Shutterstock is that they don't have a lot of inventory. People are uploading this for free, and then Shutterstock is displaying it to the customers. And when the customers buy it, well, then they pay the contributors, the content providers here, and then they pay them, but only when the photos or the movie clips are sold. So that is a very nice part here. So when they have $158 million in working capital, you know that it'll not be eaten up by inventory. Of course, they have to develop a lot, and they have some web developers and tools developers, but it is not eaten up by inventory, not at all. You can see they have some tools, some editing tools and plugin and collections, and the content is images, footage and music. That's basically it. It is actually quite a simple business model, but I do like it since they don't have to invest a lot of money in buying 1 million different or 340 million different photos and have them in their inventory. So very nice indeed. When we're looking at the latest number, the second quarter of 2020 here, we can see that there has been a slight decrease in their overall revenue. That is actually only half of this, because on a constant currency basis, it is only 1% decrease. So they have been hit a bit by probably the US dollar, I think. But their net income has increased from 15.7 to 19 million. That's nice. The EBITDA has gone up from 12 to $37 million, which is 3x here. That is very nice. And as you can see, the net income per share, 0.44 up to 0.53. What I also do like to see is that the free cash flow has gone up from 19.8 in 2019 to 22.4 in 2020. So they are growing their free cash flow, which is absolutely fantastic. The number of subscribers has increased by 23%. And it said before that they had 1.9 million customers, but that is because they both have subscribers, and then they have customers buying pictures and movie clips one time when they need them. So there are some subscriber revenues going up, and I do like this subscriber business to grow, because that is the income you can kind of plan for. I have it in my own subscription service for people in Denmark, where I can see 6 or 12 months into the future and see what is probably coming in, and that is a steady way to build the business, and I do like that. So there are some extra numbers here, and you can dive into that. If we're looking at some of the platforms, we can see here that at tip ranks, only 3 analysts are rating this, so it's not something we have a lot of statistics on, but it is a small stock, and they are estimating it to go from somewhere from $60 to $65 within the next 12 months. Now, looking at this chart, I actually think it will go a lot higher. They are just estimating it to be somewhere around down here. And if I believed it could only go up to 60 to 65, I would probably not buy it here, not in this bit speculative portfolio. I think there's definitely room to move up towards 75. But again, that is not a target and it's not a recommendation. I do not work with targets, but I do like to have some sort of idea as to what am I risking? Well, from 57 here down to around 48, 49 here, so I know what is my downside, what is my upside, and I do like my upside to be a lot larger than the potential downside here. So that is the one from tip rank here. When we're looking at the Guru Focus, there is one thing I do not like too much, and that is that the insiders are selling. Now, there is a couple of insiders here selling in June. I guess they might feel a bit stupid since they were selling down here around the 35. So they could have gotten a lot more for the stocks. But then we can see that a lot of the insiders has been selling here. That might have been the trigger for this drop here. But what we can see is that even though there is a lot of insiders selling, they are actually, the stock is still going up very, very nicely here. So that is an area of concern. I do not like to see a lot of insiders selling, and it is something that I'll have to keep an eye out to see if that keeps on going. However, this is a bit more of a speculative trade of mine, so I can get out quickly if it starts to turn down. It is not a stock that I'm planning to keep for the next 20 years. But of course, if the trend keeps going for 20 years, I'll gladly keep it there. When we look at the Guru Focus here, we can also see that actually here in there, in Guru Focus, they have this, let me just make sure you can see it. They have this predictability score. I have mentioned it before, but when you can see here is that if a stock has 4 stars, it means that it has on average the potential to make 9.8% per year, and that is quite nicely. And then there's only 8% of these stocks, let's see here, 8% of these stocks will still be in a loss if held for 10 years. So it is a predictability score telling us something about how much we can expect from this. And this is over thousands of stocks, and it is just a simple average of some statistics. So it's not something I normally look too much at. But in a case like this, where we do have a small cap stock that have 4 stars, that doesn't happen too often because the small cap stocks are often a bit more unpredictable. But what Guru Focus here are evaluating is that it says it is very predictable, and that is of course also a good thing. We can see that the financial strength is 7 out of 10 and the profitability is 9 out of 10. That is very nice. Now Guru Focus have started to make their own value graph here. And as you can see, it is, of course, we want to buy it when it is cheap, and we do not want to own too much of it when it is expensive. Now, in a stock like this, a small, a bit more speculative investment, I do not look too much at this. But I actually do think that it is fairly priced. It is just around the mean here, the Guru Focus fair value here. They are saying 54. I think that it can easily move up here, and we have seen that before, that it can move all the way outside the scale, and if that should happen, we are up at 80 or 90 up here. But it's not something I'm looking too much at. A graph that looks a bit like this is the one you know from the fast graph. We can see that over the last, they had their IPO in 2012, so they are actually 8 years old on the stock exchange, but they were founded back in 2003, so they are 17 years old and has been delivering some steady results. As we can see, they have been hovering around this blue normalized PE line, and right now they are just above it. But if they were to just move up and be at the same point here as the PE line suggests, then we can see there could be something like 16% per year, including dividends. So that is also okay. The last one I'll show you here is from the SACs. That's also something I look at. I normally never buy stocks that are lower than 3 here at the SAC rank. And what that is telling us, you can see here that annualized return, if you're buying the ones from the SAC rank, is 24.4% and so on. And here we have a 3, which again is a statistical number over a very, very large sample of stocks. But I do like it because it's telling us something about if they have been positively surprising the analysts. And they definitely have. And we can see down here at the broker recommendations here, again, there are only 3 to 4 brokers following this, so it's not really so valid as a statistical number. But we can see that 3 months ago there were 2 saying hold and there were 1 saying sell, meaning they had a total score of 3.33. The lower the better. 2 months ago there was 1 buy, 2 hold and 1 sell. Then 1 month ago it was 1 strong buy, 1 buy and 1 hold. Then it was 2, that is a week ago, it was 2 strong buy, 1 buy and 1 hold, and that was again that yesterday when they closed. So they had gone from a score here at 3.33 to 1.75, where 1 is the best and 5 is the worst. So that is also an okay indication. Again, all of this just supports my case, and I do like to kind of build a case when I see this. I rarely just buy something because it gives me a buy signal. When I run my scanner on the US small cap market, I might get 100 different stocks. And when I sort them out manually, I might sit back with 20, 30 different candidates. And then I run them through my the different platforms I'm subscribing to here. And then I find the best candidate. So right now, the Shutterstock is up around 10% for me. But I think it has a lot of potential. Again, I'm not a financial advisor, so take a look at it for yourself. Be your own judge of what you invest in. This is a bit of a, I guess you could say, a bit more risky play than many of the other stocks I'm looking at. But again, I think it is less risky than the gold mine stocks I had a look at the other day. That was quite speculative, the Cabral gold, which I believe a lot in, but again, there is a lot of waiting time before they actually start to make money. Here we have Shutterstock. They are making money. It is a good and solid company, 17 years old, and they are showing me that the buyers are really coming in, running hot here. So have a look at it, use it as inspiration, and as always, take care of yourself and your money out there. Bye for now.